Hey guys, this is Matt with the Bullish Bears team. If you've stopped by the swing trade room, you might know me as Melrod. And here lately, I've got a lot of questions about what a lot of my strategies are, why I sell options, how they work, operate, things of that nature. So I thought I might do a video or two kind of sharing what my approach is to the market and how I make money by selling options. What are the advantages of selling options over buying options? Well, to begin with, at any time, at any given moment, in any market, you can construct a strategy by selling options that gives you a 70% probability of profit. We'll go over that here in just a little bit. But the most important thing to take away from this is that the number one thing that changes the pricing of options is IV, implied volatility. That is a basic, fundamental key to the way that I trade. Also, you can put time decay on your side. You can make theta work for you instead of against you. Options are decaying assets. Every single day that you buy one or hold one, it loses value. When you sell options, it works in the reverse. So make theta work for you. Exits are mechanical, not emotional. I know what percentage of my probability of profit that I want to take my profits on. And so instantly when I get filled, I turn around and enter a GTC order to take my profits where I have it set. You can also set it and forget it. I have a lot of things going on in my life. I'm a busy man, father, husband, full-time employee. I can't just be watching the screen all day and chasing stocks, scanning, finding different plays. I prefer to find things that it takes a little time to play out. And finally, you don't have to be right about the market or the stock direction. I know that you can increase your probabilities by charting trend lines, angular support and resistance, fibs, things of that nature. But when you're selling options, you're far enough out of the money that it actually gives you a little room, a little wiggle room to work with. So how do I get my 70% probability of profit? So if we go into my trading platform right now, I've got Adobe pulled up. This is a trade I took on the other day. I'm actually in an iron condor on it. But if you look, the market's been selling off rapidly lately. And what does that do? That makes implied volatility skyrocket. So the RSI is oversold. Implied volatility is actually, if you look at it, it's at an all-time high through the year. Right here, it was maybe back in February on the last sell-off that it really spiked. So I chose to sell an iron condor. But how did I construct a 70% probability of profit? If you go into the options chain right here, you can see that the columns that I have selected is open interest, volume, implied volatility, delta, and probability in the money. So guys, the way that this works is a good entry on Adobe is when it's oversold, implied volatility is high, it's showing some reversal signals. So I come here to the probability in the money column, go down to roughly find 30%. So you can construct it however you like, guys. You can have a 38.48% chance or 32%. I like mine to be about a 70% probability of profit. So I find the closest thing, which is the 26.6. You right click, sell, vertical, and this is what we call a credit spread. You buy the 230, I'm sorry, excuse me. You sell the 230, you buy the 225 as protection. And the way that you find out what kind of probability of profits you have, you can actually go to the Analyze tab. I might go into a little greater depth on this in a later video, but right now I'm just trying to give you a flyby understanding of how you actually can construct a trade that has a 70% probability of profit. And as you can see here, this credit spread that we have, thinking that Adobe, again, is either going to trade sideways on this support line that it has on this fib, might go up, might trade sideways. But look, guys, 230 is right here on this blue line. It actually even has a little room to come down. And even if it does sell down past the 230, I'm not going to panic and sell, guys. This thing expires on November the 16th. Even if it gets down here past my short strike, I'm still not going to panic. I'm still not going to sell. There's ways to mitigate your risk that you're exposed to. Again, that'll be a different video. But what I want you guys to really take away from this is how you can actually construct a probability of profit of 70% or better, or whatever you want it to be at any given time, at any given moment. But again, guys, the key is your entries. Something else, take profits often and early. A lot of people will tell you, I've heard people argue, well, look, man, that's in a great spot. I like those strikes all the way out to expiration. Why don't you hold it and take the full bank? Okay, well, let's just say that I could take my profits and I could have about 50% of my potential of profit by taking it right here, right now. Why would I not want to go ahead and take my profits off the table, bank my money, find a different trade, and continuously do that over and over and over again? Because if you do that, you take this 70% probability of profit and you actually increase that by taking profits early and often. Secondly, and I said this before, guys, implied volatility is the key to trading options. It is the one unknown in the pricing of options, and that is what changes the price of options more times than not. General rule of thumb, what you want to do is you want to sell when implied volatility is high, and you want to be a buyer of options when implied volatility is low. Again, if we go back to this Adobe trade that I'm in, you see that it's extremely overbought on the RSI. We all know if it gets overbought, people are going to start buying. It's going to check up, and it actually found some support, maybe a little bit of a reversal signal here with a high wave candle. But you see, you instantly had a drop in implied volatility. I'm actually going to show you guys in my account. If you look at my overall PL from the opening of these trades, I got some of these about a week ago. This Adobe one I got in, I believe it was about 3 days ago. I actually had a spike in implied volatility once the market started dumping and selling off. And yesterday I was actually down $223 in my account. And guys, the stocks really didn't move a whole lot against me. The thing of it is the implied volatility skyrocketed. It actually increased from when I got into the trade. So that's the reason all these show negative. There's not a single trade other than this EWZ ETF right here at 63. That one's just a tad bit outside of one of the wings of my iron butterfly. But none of these trades are losers, guys. All of these are still inside of my brackets of my iron condors. They're still inside of my short strikes. I've got a long time for this to play out. Let IV drop. I love to see the spike in IV because I sold even more. And once I get a drop in IV, all these are going to start showing profits. I have good to cancel orders in a couple of them right here. Just like I told you guys, take profits early and often. If you've ever bought a contract, an option contract, and the underlying stock actually moved in your favor, but you notice that your price of your option contract did not reflect that move, guys, you can blame it right here. Implied volatility. Implied volatility. That has everything to do with the pricing of options. You have to have a grasp on implied volatility to even begin to understand options. If you don't understand that, you will lose at options. Put time decay to work for you. I know that Lucian has several good videos on the Greeks and what he coins as the minutia of all the options. But theta is the time decay. Options are decaying assets. They lose money each and every single day that you hold them. When you sell options, you actually put that time decay to work for you. Exits are mechanical, not emotional. No secret, guys, that most traders fail. Statistically, 90% of traders fail. And if you want to be in the top 10% of traders that are profitable at this, you have to have control of your emotions. Even better yet, remove yourself from that, guys. And due to IV, it's hard to lock in an absolute price point to take profits when directionally trading options. However, when selling options, we have the luxury of automatically setting our profit zone and letting our trading platform close the trade for us via a good to cancel order. Instantly after getting filled upon entry, we turn around and enter the good to cancel order for taking our profits. You don't have to sit there and chart it all day. You don't have to watch it all day, guys. You don't have to wish it would move in your direction. You completely remove your emotions by removing yourself from the system. Set your profit zone, set a good to cancel order, let your program close it for you, and go live your life. Set it and forget it. Busy guy. Full time. I work a lot of overtime. I have a wife, 4 kids, 2 in college. I have a 16-month-old. My high school kid, she's a captain of the cheer squad. She runs us everywhere with football and basketball. I built my dream home 3 or 4 years ago. I have a lot of responsibilities, and I just cannot be tied to a computer screen all day. With these orders, guys, once you're filled, once you set your good to cancel order, you can go on about your life, and you can come back and you can scan and look for different plays in your time that you have set to come and trade for the day. Set and forget it, guys. Also, you don't have to be right about the direction of the market or the underlying stock that you're trying to trade. Overall, no one is really that great at predicting where a stock is going to go. Again, you can better your chances by angular resistance, trend lines, support and resistance. That all factors into selling options, and you can still use that. But what this does by building a 70% probability profit, guys, it gives you some wiggle room. You don't have to be dead on right. Like if you go back to Adobe, again, the stock's trading right here. Here's our short strike that we sold. This thing has a lot of room to sit here and bounce around, go sideways, go up, whatever, guys. You're not tied down to a computer, and you don't have to be 100% right about the direction of the market. Like anything else, nothing's ever just foolproof and solid and works all the time. There are negatives. One thing is, to hold these positions, it requires a larger capital to buy in directional trades. So if you have a smaller account, it can kind of deplete your account sometimes. But guys, if you got a 70% probability profit, you take your profits early, that frees up money, and then you go look for another trade. It's really no different than swing trading, holding something for a week or two. But in most cases, in these trades with selling options, you're going to find that you're going to hold your position for probably 2 weeks to possibly even a month and a half. You have to get in that trade. You have to let theta work for you. You have to let IV turn in your favor, and then take your profits. As you saw in my account as well, it's very possible to show a net loss in your positions for much of the hold period, but it does not mean that that trade's a loser. I was negative on Adobe, but I'm dead in the middle of my iron condor, guys. The reason that I'm showing negative was this spike in volatility after I got into the trade. As it kind of settles down and starts these slow grinds like it was in, IV is going to drop. The cost of those options are going to go down. I can close them back cheaper, and I'm going to make money on them, guys. Just because it shows negative, it's not a loser. Which brings me to number 4, an increase in implied volatility actually hurts these positions, as you saw them on count. Number 5 is a biggie. A lot of people are really scared of this. I was terrified of it in the beginning as well. One thing that you do run the risk of is if you let the underlying stock get past your short option, you do run the risk of that option being exercised. It's a totally random situation. But there's different ways of dealing with that. So don't feel like if you're selling a short stock or a short option in Amazon that you're going to have to go buy 100 shares of Amazon at $1,800 a share. There's other ways around that, and if these videos get some traction, I will actually touch on that in a different video. And a general rule of thumb: when IV is high, you want to be a net seller of options, and you need to sell those 30 to 45 days out. I'm actually working on what I call a weekly Wednesday. I'm still trying to fine tune that strategy. It's kind of hit or miss right now, but I still believe that it's going to work. And when IV is low, you want to be a buyer of options. And if you buy options or buy spreads, guys, you want to do that 45 to 60 days out. That time frame right there actually gives you your premium option pricing. So in conclusion, I'm not trying to change the way that you trade. I've had a lot of questions about this. And for someone that might be busy, that can't be tied to the screen all the time, this right here is a great way to make money in the market. I hope that this has cleared up a lot of the questions that I've been getting. And guys, options can be very complicated. When I first got into it, my mind was blown. Names like the Iron Condor, Butterfly, Straddle, I thought that I would never get there. I wasn't even interested in them. It just sounded way intimidating. But an Iron Condor is one of the simplest strategies. Once you can wrap your brain around how they all work, it's one of the most simple strategies that you can actually work. So don't be intimidated, guys. Do the work, do the homework, and learn it. And I guarantee, I think that you'll really enjoy this style of trading. So any questions or comments, leave them below. I'll get to them as soon as I possibly can. If I've skipped over some things that you guys are interested in, please leave that in the comments. Contact me in the room. Hit me up. If these videos kind of start to pan out and work, then I will definitely do more in the future. and I will see you guys in the rooms. Have a great day.